All right, good morning, good afternoon, everybody out there. Welcome to another episode of Daily Rates Live. We are a mortgage lender and broker that is licensed in over 20 states, and we offer all kinds of different loan products. So if you'd like a full breakdown on any of the products we go over today, please get with one of our team members. They'd be happy to help you out. And you can also visit our website. But what we do every day is go over the markets in general, our actual live rates for all of our standard programs, and then we do a deep dive into a topic. Today, smaller scope here, 5-day scope here. We see a lot of up, a lot of down, a lot of news. But if we look overall in the last year, we're pretty much at 1-year lows and even some 3-year lows in some cases here. So definitely a great time to be out there shopping. Hopefully everybody is out there and seeing some more affordability and some more activity in the real estate marketplace. Now let's check out our standard loan program. So for our live rates page here, we have dozens of our standard programs that update on a regular basis. And here we can see we set up a standard scenario, a single family home, 500,000 purchase, 300,000 loan amount, corresponds to 60% loan to value, 760 estimated credit score, and 40% estimated debt to income ratio. That way we can see the lowest rates offered for all the different programs across the board. And first up here are conventional options for a primary home, standard 30-year fixed loan that you think of when you think of a primary home mortgage. Rates as low as 5.875 today. Final APR comes in 6.111 when you add in any fees and discount points there. And if our customer doesn't qualify for a conventional option, we typically want to compare an FHA option. FHA allows more leniency on credit issues, higher overall debt to income ratio, but does have additional fees with upfront and yearly mortgage insurance. FHA comes in today, a little bit lower rate there, 5.25, but you see the APR with all the fees included, 6.167, just a touch higher, which is pretty typical when you compare conventional to FHA. Now for our VA eligible borrowers, our active service members and vets, and surviving spouses, VA programs are pretty amazing. You can see here the rates as low as 5.25, but when you look at the APR, 5.5% APR there. Definitely much lower fees for our eligible vets. So typically VA is going to be the best option for those that are eligible. And our other standard option here, USDA programs are for USDA eligible properties. Those are the rural areas of the country. So if the property is eligible and our borrower is eligible, these programs are great to compare. Rates as low as 5%, final APR 5.698, which is lower than FHA or conventional if our borrower is comparing across those. So typically that's one of the best options for those that it works for. And now where we start to shine here at the mortgage calculator are outside the box options where we can go with our non-QM, our non-standard options, and use alternative docs here, such as bank statements, 1099s, etc. And this is for a primary home. We can switch to these alternative documents if our borrower, typically our self-employed borrowers, may not qualify conventional, FHA, etc. We can switch to non-QM, rates as low as 6%, final APR 6.272, very comparable there to conventional. It's always just a touch higher, but that is amazing for our borrowers that would otherwise not be able to get a loan. And we can use alt docs for investment properties, rates as low as 6.125, final APR 6.448. And we'll compare that to conventional for investment properties. Very similar here, 6.125 rate, final APR 6.438, just a touch cheaper, which is pretty typical. And we also want to look at our DSCR programs. These are our most popular programs. No income or employment needed. Simply use estimated rents from the rental property to determine a DSCR ratio. If the ratio is over 1.00, aka the property cash flows, that's what is set up for this scenario. And this option has a 3-year prepayment penalty, which is standard, 5.999 rate, final APR 6.307. And we can add a 5-year prepayment penalty to lower the rate a touch there, 5.875 rate. Final APR comes in at 6.181, sorry. And that beats conventional, beats alt doc. Pretty amazing when we have a DSCR option that beats everything out there. And we have our DSCR option for no prepayment penalty, coming in at 6.125 rate, final APR 6.448. So very similar there for those states that don't allow it or our customers that don't wish to have one. We do have those options. And there are dozens of other options here, second mortgages, other commercial, SBA, construction, tons of different options. Please get with our team members to get a full loan estimate on any of our programs. But let's get into our topic for today, which is going to be our portfolio or blanket loans. So first up, we want to identify a property. Definitely helps explain what we're talking about here. So I was able to look on LoopNet, which is the website that lists commercial properties, and I was able to find a portfolio sale here. So portfolio would be where there's multiple properties. So these are 3 separate properties. They look identical, obviously probably built by the same developer at the same time. They look identical, but they are 3 separate properties, and each of them is a quadplex. So this is not just one property for $2.2 million, even though it is labeled as such. It is technically 3 duplexes. So this is a perfect example. The seller obviously wants to sell them all together, operates them all together. So this would be an example of a portfolio sale where our borrower, if they're going to purchase, needs to purchase all 3 units at once with one loan, one closing. Or if our seller here maybe doesn't sell and wants to refinance, I will propose that as well. So this is when we have multiple properties and one loan. This is a perfect example because they're all the same, makes it nice and easy here. So first option here for a purchase, pretty amazing. We can do our 3 property portfolio using our DSCR value. We can do a 30-year fixed rate, and we can do a purchase up to 80% loan to value. That does have a standard 5-year prepay. And that is for those exact properties at this exact moment. So in this case, the prepayment penalty is 5, 4, 3, 2, 1, 5% in the first year, 4% in the second year, etc. Other than that, standard 30-year fixed loan, and for the purchase with high credit, of course, we can offer up to 80% loan to value and some pretty smoking rates here. I was pretty amazed this morning. We scroll down here, you see we can get 6.67 rate as the lowest rate option. That does have 2.5 discount points in cost, but that's pretty amazing to only put 20% down on a large income producing property. In this case, it looks like the DSCR ratio is going to be pretty strong. This monthly payment of $11,000 on the listing there, it did say the estimated gross income is about $20,000. So this property does cash flow very strong. And we'll see here the breakdown here. You can see the loan to value, the actual breakdown, and that we did use that 5-year prepayment penalty and that 760 FICO credit score to get these best options. And now for our borrowers that own multiple properties, we can do cash out. So if this property isn't listed for sale and they want to do cash out, no problem. We were able to get some pretty amazing rates. Pretty much the same setup here. This is a 30-year fixed. This is going to be the max cash out. The max I was able to get here, in this case, 75% loan to value, which is going to be the max typically for most options. And this does include that 5-year prepay. And you'll see here pretty smoking rates, 6.63 rate, having 2.5 discount points of cost. So that's the lowest rate option. Obviously, we can increase the rate a little bit if we want to lower the cost. But this is pretty amazing to get 75% cash out and make it pretty easy here if this operator operates these properties all together. But we often use these portfolio loans to purchase properties exactly in the manner that these are listed here, where a seller wants to sell them all, one transaction. We typically want to satisfy that with one agreement and one loan. But obviously, we may get better terms if we do it separate. But this is a very common request. Now, let me talk about a couple pitfalls. Again, we would never want to do this if we didn't have to. So if the seller was able to give us 3 different purchase contracts, typically that would be preferable because then we could sell each property individually or refinance each property individually, and they want to be locked in together. So we need to be cognizant of that. So if the borrower wants to purchase all 3 at once, but maybe wants to sell one of the 3 at some point, we may need to propose separate deals or look into the carve off. So that's where the portfolio loans get a little tricky. Please get with one of our team members. They will find the right option for your exact scenario. And that wraps up for today. I don't see any questions in the chat there. Again, if you'd like a full breakdown, please get with our team members or go to our website, themortgagecalculator.com. We'd be happy to send you a quote just like I broke down today for any of our scenarios, especially our unique DSCR, portfolio, or blanket loan options. So thanks everybody for joining us. We'll see you later this week for some more episodes of